Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. Last week, we have seen that volatility was there across all currencies. There were two important reasons for the same. First, US job data came on a weaker side on Thursday. Revision हुआ उनके non-farm payroll का. And second, on Friday, Fed finally said that time has come for the Fed to slash interest rate. He was very clear in his word that they are going to cut the interest rate in coming months, but how much quantity and by what time frame they are going to cut how much, that is not clear. They had given a diplomatic answer for the same, that it depends on the data, but we expect that the season for rate cut has started. And the viewers will appreciate the fact that in the last week video we have said the same thing, that Fed is going to cut the interest rate and dollar index is going to move towards 150 kind of level, and exactly the same thing has happened. Now the big question is, what next? In today's presentation, let us understand that. So before moving to what next, let us understand from how the economy in US is doing. So there is an indicator which is called leading economic indicator, which is published by conference board, that predicts the future moment of an economy. In the in that indicator is indicating this US economy is reaching to its level where it was seen last time during COVID level, which is indicating that all is not well in the economy. So when all is not well in the economy, that currencies is not going to get stronger in the near term. If you see dollar index chart, it is saying that picture abhi baki hai mere dost. Technically speaking, the major trend of dollar index is still on the downside only, but as in 1 month it has fallen by 3.5%, we might see a bounce back towards 150 to 102 kind of level. But exporter and importer should use this opportunity to go weaker on dollar, as a broader target for dollar index remains towards 98 levels in coming days. Now let us discuss outlook on rupee. If you see the table, it is clear from the table that dollar index has become weaker by 3.5%, and all other currencies have become stronger against the dollar. Only rupee was an outlier. Generally, if that scenario happens, it indicates that the economy of that currency is not doing well. But as we all know, that Indian economy is doing well. Then why rupee is not appreciating? The obvious answer is that as RBI has been buying dollars at all levels, till what time they are going to buy, that is anyone's guess. But the important point for all exporters and importers is to understand that whenever they are going to release the spring, the volatility is going to come back. And from the recent experiences of euro momentum, pound momentum, and Japanese yen momentum, one thing is sure, that nothing can remain undervalued or overvalued for a longer period of time. In this kind of scenario, the best thing for any exporter and importer is to plan their hedge well. Next week, MSCI inflow close to 3 billion is expected to come in Indian market, which can provide support for the rupee. If RBI stops buying at that level, then the pair is expected to move lower by 30 to 40 paisa in couple of trading sessions. If RBI continues to buy, then the rupee is expected to continue to trade in a narrow range between 83.75 on the lower side and 84 on the higher side. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. Most of them are taking aggressive costing between 83.75 to 83.85 kind of a level. For them, we will suggest that on Monday morning, if 83.75 is taken out, then ideally they should go and cover 100% of their open exposures. If rupee is taking support at 83.75 and bounce back towards 83.85 to 95 kind of a level, then that bounce back should be used as an opportunity to cover 100% of their open exposure. Let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. We will suggest them that between 83.85 to 83.90 kind of a level, they should continue to increase their hedge ratio. If someone is hedging under anticipation order basis, then they can keep a hedge ratio close to 55 to 60%. If someone is hedging under confirm order basis, they can keep a hedge ratio of 75 to 80%. Now let us discuss strategy for importers. We need to see on Monday morning whether rupee is breaking a key support level of 83.75 or not. If that happens, then ideally rupee can appreciate by 30 paisa. In case if on Monday morning RBI starts buying near 83.75 or 83.80 kind of a level, then importers will have no choice than to go and buy 50% of their next 30 days import near 83, 82, 83, 85 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.